So, which costs are going up here exactly in the data center story? And you can't say everywhere, everything.
A lot. I won't say everything, but a lot of costs. The cost of electricity is going up, power, cost of some of the gear that you buy to run a data center. Simple stuff like copper has gone up a lot, and AI data centers use a lot of copper, a lot more copper than regular data centers. So it's a lot of different things.
Okay. And how are companies getting around this? I mean, copper, are they hedging? Are they innovating? What's the solution here?
So right now and for the foreseeable future, there's not much you can do. Or if you can manage one, you're stuck with another. It is just the demand has been very high for this stuff. There's been underlying inflation in some of these commodities, and it's all sort of come together. There's a lot of things going on that could change things in the future, small nuclear reactors and, better management of power, better, more efficient chips, all that stuff. But that's all in the future. And as we know, you need the computing power right now, today. And so that's the stress going on in these developers.
So the thrust of your column was really looking at what the net impact will be on these data center development projects then. And the obvious hurdle here is getting over these costs. I mean, what do you see then playing out here? Do these projects slow down? Do some of them get shut down? What are the repercussions here?
Right. So look, nothing is stopping the AI juggernaut, right? So they're still going to be getting built. And the people who are funding, or the companies that are funding these, Google and Meta and Microsoft, are, cash rich and they can handle it. So that's going to keep going. The question for them is going to be, at a certain cost, do I keep rushing? Do I slow down? How do I think about that? The pressure is going to be on the smaller players, some of the data center developers, some of the companies like Oracle or CoreWeave, who are in the middle of all this, and they just don't have that kind of money, and so they're dependent on raising money. And so when investors are looking at these and they're saying, well, I don't want to lend you this much money for this much data center. I don't think we're going to get a return on this because the costs are too high. That's the sort of thing that's going to go on. And, we're seeing mentions of it. We're seeing a lot of discussion of it. We haven't seen things not happen or projects get canceled. But my view is that's going to start to happen this year, and they're going to be the projects on the margin. And you may not even hear about them because there's some project that someone's going to do and they pencil it out and it just doesn't work and they don't do it.
Is there at all a cascade that could happen here in terms of you see a couple projects get canceled and then and I'm just trying to think of the ecosystem of players
Mhm.
here. You talked about the way that they get financing here, and there's obviously the debt component to it all. Um, I mean, I guess my question is, is each project really considered in isolation in terms of whether or not it actually goes through, or is there a bit of a cascade risk here at all? And I'm asking as someone who hasn't really followed real estate, which I know is so central to this story.
Yeah, I mean, I don't see a cascade. I mean, I think, there could be companies that run into a bit of trouble, right? They may not hit their growth targets, but that doesn't mean they're going to be like disappear. They're just going to be, not as robust and not as attractive as they were. I think, the issue is going to be, does this slow the pace down? Is there, are there any, big events, for example, in the last in the last few days until today, interest rates have been going up a bunch because Trump has been screaming about Greenland and stuff like that. Well, like if interest rates go up much more, that's going to be an issue. That's going to be an issue across the board, and so like that could really grind things down. So we just have to see how all this plays out. It's I think the individual companies, it's going to be that depending on their financial situation, whether they go ahead with this stuff. And underlying that is how much money they think they could make from AI. So, like we saw over the weekend, OpenAI released some data on its growth. And essentially, it was almost a perfect match, which was, every year for the last 3 years, computing power has tripled, and so has revenue. So computing power growth equals revenue growth. And so if you don't have the computing power growth, that's going to slow you down.
Right, right, and we've certainly seen companies coming out and saying, I think it was Andy Jassy actually who told Jessica in Davos. He said, if we had the capacity, I
Right.
mean, we would be growing a lot quicker. So that certainly seems to be the consensus right now. Ken, I want to thank you for coming on the show. It's certainly a story that we will keep monitoring, and look forward to having you back again soon when there is more news to talk about. That is
Yep.
Ken Brown, our finance editor here at The Information.